GKFX Prime presents the Market Analysis Webinar.
Hello everyone, welcome to another edition of the weekly webinar. It's been a crazy last week in markets. The Nasdaq 100 and the Nasdaq Composite both hit record highs last week. Clearly there's large amounts of optimism in markets. We're also going to review the optimism that's evident in the other markets. So every week we will cover the currency market. So I'll be looking at the euro and the yen. I'll be looking at the pound and the Aussie dollar. And I'll also be looking at commodities and indices and the cryptocurrencies. So that includes gold and Bitcoin. And it also includes WTI crude oil and the S&P 500, and just one extra special one. I wanted to show you that Nasdaq chart as well. It's a technical analysis based webinar. We're covering the most popular markets with some of the most interesting moves, but if you had any particular extra market you wanted us to cover, please drop a comment in the video, or anything else you wanted to say, please let us know through those comments, and we'll respond in due course. Right, without further ado, let's get on with it. Let me pull up that Nasdaq chart right here, and this is just a very simple chart. It's the daily candlestick chart, and you can see quite clearly the plummet in February and March and the subsequent rebound. And so this is the absolute definition of a V bottom, where that decline has been completely erased. And obviously this is just a gargantuan move higher. No one thought that we were going to get back up into record high territory this quickly. It would have been a reasonable guess that if we were going to get to record highs, that it would be the Nasdaq that does it first. It's full of big popular technology companies, many of which, particularly the more online based companies with less physical sales involved, have actually been doing quite well during the pandemic. Actually, there's been a bit more demand for their services. They were the high growth companies anyway, and so people took the opportunity to buy in at lower prices, and obviously the momentum and their outperformance has just carried those technology companies and the wider Nasdaq 100 higher. So it's impressive stuff. Clearly there's no overhead resistance from here, because we're up in record high territory, so all a bit of an unknown. But given that we're at 9,830 right now, you've got to say that the logical target is going to be about 10,000 in this Nasdaq 100, and similar round numbers if you're targeting the if you're looking at the Nasdaq Composite. Now clearly we are still at risk of a false breakout here. So we closed above here on a daily basis. We also did for the week, both of which are very strong signals. Clearly it's a bullish market right now. If you go down to our 4-hour chart, we're trending from the bottom left to the top right. For the time being, what we'll look for is potential pullbacks towards this record high territory as an area to look for opportunities to go long the market. But I think it is a risk if we go meaningfully below, close the day below those record highs, then we run the risk of it being a false breakout. What I tend to look at for when what I tend to draw when I'm doing these false breakout possibilities is just insert a shape and just draw something like that. So if we were to close down here again, that would be rather than breaking out and continuing the trade, in fact we'd get a false breakout, and there'd be the risk of turning lower. There's got to be a bigger correction at some point, clearly, but it's not about predicting when that comes. You've got to follow the price action cues. At the moment it's all very strong and bullish, and we tend to want to be long the market for the time being. We might miss that initial leg lower. Hopefully we get some earlier signs without a big move down, then actually the market's running out of steam. For now we haven't got it. Anyway, just wanted to show you that Nasdaq chart, thought it was interesting. Let's switch back to what we typically focus on, which is starting with the currency market. then moving through to the indices, to the commodities and indices and in crypto. Now, talking of big strong moves higher, Euro's certainly been one of them as well. So let's get a bit more context on this from our daily chart. Here we were in that price range forever, obviously. Then we talked about the breakout last week, and we got a massive extension on it, and it ran into that 114 level that we've had on the chart for a long time. Actually, we haven't quite reached there yet. We've had a pullback. You can see it a bit better on the 4-hour chart. We kind of basically had this little reversal candlestick here. And just sort of a little tweezer top here, then that final reversal false breakout. It's like a little mini version of a false breakout, if you like, and we've turned lower since. But to me, the market's still bullish. With these kinds of big, I don't want to say parabolic, but strong moves higher, if there is going to be a pullback, it tends to be a short one if the move is going to continue higher. Otherwise, it tends to just largely reverse. So, this is a particularly crazy instance of what's going on here. But you can see that either it just massively reverses, or in the instance of something like this, the big rally up only pulls back for a day or two sometimes, and then legs up again. So I don't expect this particular pullback. My first instinct, looking at the chart here, is my assumption is that we haven't reached 114, we haven't reached this previous peak. There's no particular reason for the market to pull back from here. I'm looking for this move to extend higher, going along with the trend, and I don't expect the pullback to be too large. And if it does become large, then I'm not going to be treating this as a trending scenario anymore. So I think between 112 and 112.50, and I suspect not much beyond 12.50, is where this pullback ends, and that will be the basis for a kind of swing trade. If we do get a much deeper pullback lower, markets really reverse the strong sentiment from last week, then okay, so then the trend is clearly not continuing. You have to move on. You have to diversify into a non-trending tactic for the market. But that's what we're working on the basis of, holding 112. We already had the rally up, tested 112 once, so if we do give through it, then you got to assume it's going to hold below it for a little while. Maybe we come back to test this this key breakout zone down here. Let's move on to the British pound, and actually this is one of the more interesting charts, I think, because despite all the terrible headlines that you get about Brexit and the state of the trade talks, we actually had some better headlines on the trade talks last week, a bit more. There's going to be some more meetings before the June summit. Seems like a little bit more optimism, at least on the UK side, and so potentially chance of a deal a little bit brighter as of last week on the Brexit front. But I think whether these talks go well in June or not, we have a kind of long-term bottoming scenario. It looks like in the pound here. This was the flash crash low from back in 2016, not long after Brexit. This was Brexit, that was the flash crash, and then as of this year, the pound really heavily sold off when the dollar was rallying in March, but it found a bottom in pretty much the same zone, and we rallied up, and then we formed a bit of this there's a consolidation zone. Now that when it's a consolidation, you have to try and do your best to work out whether you think it's a distribution, so big sellers coming in and selling off, or whether it's another accumulation phase, and so it's just dipping down, being accumulated, dipping down, being accumulated, dipping down. People trying to sell it, sell the break lower. When people are selling the break lower, the big accumulators come in and accumulate more. And that looks what it's been. And then we're up through the top side here, of course, again, could be a false breakout. Got to consider every scenario here, but it looks like, based on this bigger picture, that we're bottoming out. We had the consolidation, we're breaking out now to the top side, and to me, the natural thing from here would be that we've taken out this high and we push on up to these previous highs, which is still a decent distance away from where we are. We're about 127 now. The top of that where we tanked on a weekly basis started here. Nicely comes in at 132. So 127 up to 132. Clearly, we're talking about a 500 pip possible upside move if this surge consolidation surge again if that scenario is to in fact take place. Okay, let's look at the yen. Also interesting, the yen is sort of similar to sterling in a way in terms of the recent price action. Rally up, pull back, had the inverse head and shoulders pattern here on the 4-hourly basis, you know, with the kind of neck kind of extended, almost cup and handle. We said the same thing last week, and we've broken out to the top side. We've stalled a bit at 110, but based on this breakout, you know, we had the rally up, pull back, ran out of steam, stalled out for a while, and broken to the top side. And so this looks generally bullish. The theme is that havens are doing badly. So the dollar's doing badly against other currencies as a haven, but the yen is more like a known haven, and so actually the yen's doing worse against the dollar. So we've got to take out 110 first, but if we do, it looks like that we're setting up a good chance to kind of rally up into 112 is really the actual kind of price target, if you like, but it's always a zone. So, you know, if we can get through 110, then we're basically pushing into the top of the highs here. And then beyond there, it's back to the top of this trading zone again. So you can basically see that we held the lows, and we're not coming down to challenge them again just yet. It seems we're heading up towards the highs again, and so we're still in this kind of trading range. Aussie, still a great performer. This is the weekly chart too, and you can see another example of a kind of V bottom. Not obviously back to record highs or anything close, but this is a weekly chart, and so we're actually back at the highs since the start of the year. And the 0.7 level is a critical one. And throughout these webinars, I'd always been talking about 1.7 as being that kind of big upside target level, and I've been impressed how quickly we got there. You know, we've crossed various resistances on the way. You can see this was always an interesting one for me. We did consolidate there, and you can see that on the weekly chart basis there. And then we ran into these lows, which again we did stall against, but not for long, and we've rallied up, and we've kind of taken out all these little small highs along the way, and we've ran straight into that 0.7 and that previous high. We've not touched the previous high yet, but you know, we have kind of touched the 107. No huge signs of reversal here. Clearly some kind of quite long, clearly there was a bit of selling, you know, rallied up, sold down, rallied up, sold down, rallied up, sold down. So I wouldn't be surprised to see a bit of a pullback day here, either today or tomorrow, from this 0.7 level. But it doesn't look overly bearish at the moment, I have to say. If we've touched the 0.7 level as of Friday, and it wasn't like we touched 107 and then closed lower for the day or at the lows. We closed midway through the trading day, just looking at this daily candlestick. So still feels quite optimistic in the markets, and so you know, basically the growth, the markets with a kind of growth tendency to them. So the Aussie dollar, the pound, oil, stock markets, they're all pushing higher. Things like bond markets, gold's looking a bit heavy, the yen, all those kinds of haven trades, they're looking a bit softer and actually breaking to the downside. So clearly kind of optimism running through markets at the moment. It's just a question of whether it can hold up. Often the price action in the charts tells us first. So here is, am I jumping the gun here? No. No, we've covered Aussie. So this is a daily chart on gold, and what I think could be happening here is that we've had, and I said pretty much the same thing last week, drew a couple of kind of rising trend lines that have been broken. I think we've had a false breakout through 1750, and I'm generally of the opinion that we probably need at least a false break down or a big leg lower down towards 1600 to collect some more buyers in gold again. So a bit more detail could be seen on the 4-hour chart, but you can see we had that false breakout there, retested, couldn't get up to 1750 again, and we've rolled over through 1700 with some quite high volume move lower, but we've nicely tested 1670, which has been support quite comfortably on the chart, so natural to get a bit of a rebound from there. But I'm suspecting that if we borrow this shape and drag it down to here, I'm suspecting that once we kind of pull into these lows, possibly up to 1700 again, but I suspect not even, right into the kind of current territory, that this potentially is another leg lower. And if we just, I just use this, the height of this trading range as a kind of general basis to think, well, actually we could drop down towards 1600 again. If we extend the height of this range lower as a breakout, use that to kind of judge the volatility of the market, that's potentially what we'd be looking at. And it would still be somewhat positive because we'd be holding above this low over here. And obviously higher lows denote an uptrend. So could still, still a decent bullish market overall for oil, for gold, even if we come down to 1600. That's just something to look out for. We haven't taken out 1670 yet, so we're still in the trading range. And in fact, this could be just an opportunity to buy the bottom of the range. And 1670 to 90, where we currently stand ourselves, so sort of 20 pips up to the top of the range again, is 60 pips. So somewhere between the current price and the low gives you a 3-to-1 risk to reward if you're buying into the up to the top of the range again. I'm just suggesting that the momentum looks like it's sort of rolling over. I'm less inclined to make that trade, but certainly from a risk reward standpoint, it's not a bad one. Let's move over to oil. You may have heard that over the weekend, OPEC struck a deal to extend output cuts for another month. It's not a massive deal from the prospect of like 1 month doesn't really change the, doesn't move the needle, doesn't really affect things too much, only just to show that actually this OPEC plus, I should say, the Saudis and the Russians are still kind of working together and keeping supply orderly, if you like. They're just sort of maintaining order. And that's enough for the oil price to keep rallying on the hopes of rising demand as the economy recovers. Now again, when talking about oil, we've been optimistic on this. We were just saying the strength of the rally, especially as of here when we pushed above the 20-day moving average. We talked about 30 as a potential resistance zone, but we broke through it pretty quick, and we've been pretty bullish throughout this. And we had just the round numbers as very simple target zones. So there's 35 as the beginning of this gap and 35 the round number. That was resistance for a while. Once we broke through it, we said, okay, well 40 and the top of the gap at the next area is resistance. And that's what we've just touched now. In WTI crude, 40 and the top of this gap are quite a significant area of resistance and a possible area for either another consolidation like this or a much deeper pullback. So, all these markets are showing bullish positive signs with no signs of a reversal yet, but you do have to imagine that we are actually at quite key levels, 14 WTI, record highs in the Nasdaq, that key breakout zone in the pound, 110 in dollar yen. There's a few examples where they've got to kind of breach key price hurdles, and they are potential resistance, but there's no sign of a reversal yet. Okay, so but I mean, on the basis that we do take out 40, and then you've got to start targeting ultimately this former base in the price up here, which comes in pretty much at $50 a barrel. Where I've drawn that line is basically 51. So we're at 40 at the moment. If we can overtake 40, it might not be too long until we touch 50. And obviously 50 is a level that a lot of the producers in oil talk about as being kind of a nice level from the fact that they can kind of make money from there. They still make money getting oil out of the ground, but it's a comfortable level for global demand and for consumers to actually afford to be able to run their cars and demand oil. Okay, let's have a quick look at Bitcoin. And so actually this ran up a little bit higher than I thought, but it has been doing the sort of price action that I imagined, which is where we had a run up into this, basically into 10,000 and into the previous peak. So before we had a false breakout through 10,000, We had a rally up and a lot of selling sent us lower. We've been drifting higher since. I still maintain that there's a good chance we rally up through 10,000, but I just think from a risk reward standpoint, it's still quite tempting to look for sales. And so before last week, I was talking about looking just at this area through here, and we rallied up through that into that key zone. But now this area again is kind of where we find ourselves, and so with the risk that we just take a massive rally through 10,000, the market turns very bullish. Still a bit tempting to sell at the 10,000 level. Okay, and just the final market to cover here is the S&P 500. And so notice here that similar looking shape to the Nasdaq, but clearly the Nasdaq's up here, having taken out the old highs to make record highs. The S&P 500 is it's down 1% for the year, and it's within 10% of its record highs. So it was down more. I think the Nasdaq was down about 25%. The S&P was down almost 35% in this correction. And so just a little bit further to go for the S&P 500. And interesting again that we're basically running into this. So when did we know that the market was starting to look pretty dire? When we had this nice uptrend, right? The trend line got taken out, okay, bit of a risk. And then we took out this low, we held the low, took it out, and that's when things started looking very dramatic at this point. And we thought, okay, this doesn't look like your average pullback in the market, and that's, you know, things really gathered steam. Of course, you had a bear market rally, but things really tanked afterwards. So this actually is quite a key level of it's roughly 3,200. Obviously 3,000 breaking above here was where we'd consolidated beneath it for a while. As soon as we took out 3,000, we just rallied hard. And so this is just an interesting resistance level for me, and clearly it was these lows through here as well. So it had been support for a while, and then it turned in, and now potentially it's going to act as resistance. So you know, this is a very you know, very strong trend. We've not had an especially deep correction yet. If we look at the best correction we had was this one. If you look there, it doesn't even come close. It was probably 25. I'm using the Fibonacci tool to kind of look at when we last had any kind of sizable pullback. So if I type in, oh no, 0.25, 25%. So there you can see that pretty much perfectly that was a 25% pullback from that peak there. So in this rally we've had a 25% pullback, but nothing larger, nothing like a 50%. So that's what people had been expecting, some kind of move down to here. If we're judging on that peak, hasn't happened yet. Maybe at some point it will. Even another 25% pullback at this stage would take us neatly back into these previous peaks. So that is of course a possibility. And a 50% would take us right back down to the bottom of this range, even beneath it. So clearly that would happen very quickly if it does, and so we've got to look out for it. And you know, the first thing is to be aware of the key levels, which we currently find ourselves at, and look for signs of weakness, and look for that weakness to accelerate, and then obviously be very cautious about going along the market. Look for shorts if you're inclined to. Right, that's it for that week, for this week. Hope you enjoyed that little discussion on the Nasdaq, on the record highs. If you did, please give the video a like. Subscribe to the channel, please, if you want to see these videos every week. They come out every Monday, and we're just previewing the week in markets. And of course, I'd love to have you subscribe to the channel. All right, thank you everyone. Good luck with trading this week.